Quick look at the markets now. He's like a spring coil, Tom Piotrowski always is. Let's go to CommSec now. How are things looking today, Tom?
Pete, we're going to take a little bit of a step lower at the open this morning. The futures are telling us the ASX 200 will be down by around 0.4% when we kick off. It's a big day today because we've got some important wages data at 11:30, which we'll get to in a moment. But in terms of what we saw on Wall Street and indeed in the Northern Hemisphere, it's been coloured in the last day by measures which have reflected moderating growth. We saw that either yesterday in terms of the Chinese economic news that pointed to slower activity in that economy. And overnight, another very important barometer of activity in the US, Pete. It's what people do on the weekend. Blokes mainly heading off to the equivalent of Bunnings. Home Depot had some disappointing earnings. They had their biggest revenue miss in about 2 decades overnight in terms of reporting their quarterly numbers, and they downgraded their full year expectations. This stock was down by as much as 4% at one stage. It recovered to be down by about 2% at the close, but nonetheless, these are the sorts of indicators that you look at closely to see where growth is headed and cast a pall over US markets. So the S&P 500 down by around 2/3%, the Nasdaq down 0.2%. As I said, first quarter wages figures out today. The number to look out for is 3.6. We've seen contained wages growth in recent times, Pete, but anything substantially north of 3.6% in terms of that annualized figure will certainly have the markets talking about what the RBA will be doing with interest rates down the track.